1% presumptive tax for low-income earners and small business in Nigeria, what it is and how it affects you. Dear friend, recently the Minister of Finance of Nigeria signed the Presumptive Tax Regulations Framework, PTRF, which comprises the framework for the implementation of the new 1% presumptive tax for low-income earners and MSMEs, which operate in the informal sector. Expectedly, many Nigerians and non-Nigerians have been worried, wondering whether government had just introduced another type of tax. This is why we deemed it necessary to break down the new 1% presumptive tax before it causes anxiety and harm that it didn't envisage or expected. The summary of it all is that the new 1% presumptive tax is not a new tax or a new type of tax. It is only a dedicated form of implementing the substantive income tax type, just like you have pay as you earn for employees, companies income tax CIT for companies, personal income tax PIT for self-employed individuals and MSMEs, and now inside PIT you have the 1% presumptive tax for self-employed individuals and MSMEs which operate in the informal sector and do not keep proper records. That is the target of PT, presumptive tax. So here we will show you what the new 1% presumptive tax is all about. And when the Ministry of Finance or the Nigerian Revenue Service avail the framework, we will fully educate you accordingly. In the meantime, in this video, we will provide you with invaluable insight into what the new 1% presumptive tax is all about. You will get to know the golden rule of tax freedom, the golden rule of taxation of low-income earners and MSMEs in the informal sector. You get to know the key highlights and the fundamental meaning of the new 1% presumptive tax and the legal basis for the new tax regulation. We will explain the objectives and benefits of the presumptive tax, its scope and application, key salient points, some important definitions and clarifications that will enhance your understanding, including its distinction and relationship with other tax forms and types. So, what do you do? Simple. Just follow us attentively to the end of this video. In addition, we will be releasing more videos. So to get the videos hot and fresh, kindly like, subscribe, hit the notification button, and share to as many people as possible so they can also benefit. Also, tell us what you think of the new 1% presumptive tax, whether it is legal, it is harsh, progressive, equitable, fair, nice, etc. Say your mind in the comment section. Thank you. So what are you going to learn in this particular compass? You are going to learn the following amongst others. First is the golden rule of tax freedom. Second is the golden rule of taxation of low-income earners and MSMEs. Third is key highlights of the new 1% presumptive tax, the fundamental meaning of the new 1% presumptive tax, the legal basis of the new 1% tax, application of the legal basis of the 1% tax, key objectives and benefits of the new 1% tax, scope and application of the new 1% presumptive tax, exempted and taxable business thresholds, key salient points of the new 1% tax, some important definitions and clarifications with respect to the new 1% tax, distinction and relationship between the new 1% tax and other tax forms, some tax incentives for MSMEs in the informal sector, some tips on how you can reduce the income tax of low-income earners and MSMEs, the list of the 22 interdependent compasses, then about tax corp and the authors. First now, the golden rule of tax freedom. Dear friend, do you want to be free from tax wahala? No disturbance of your sleep by a taxman. No knocking at your door by a tax lady. No receipt of long queries by your business from a tax controller. No receipt of unsolicited reminders or threats by your company. No blocking of your bank accounts by the tax chairman. No debiting of your bank account at the directive of a tax authority. No barging into you or your business by law enforcement officers. no forceful entry into your business premises by tax officers and law enforcement officers, no threat of imprisonment by a law court, no selling of your business and or its assets without a court order after the tax has become final and conclusive by the Nigerian Revenue Service. Dear friend, if your answer to the above compound question is a capital yes, then obey the golden law of tax freedom. And you ask, what is this golden law of tax freedom? I will tell you, it is called the three C's. And you say, what are the three C's? They are comply, comply, and they comply. The golden rule of taxation of low income earners and small businesses. The golden rule of taxation of low income earners and small businesses with respect to the new 1% presumptive tax is that only low income earners and nano, micro, small, and medium enterprises that operate in the informal sector are taxed under the new 1% presumptive tax for low income earners and MSMEs which operate in the informal sector. So the golden rule makes three clear clarifications. First, only businesses, enterprises, or companies with the relevant tax law or commercial law defines as low income earners or MSMEs fall into this new 1% presumptive tax band. I take it again. Only businesses, enterprises, or companies which the relevant tax law or commercial law defines as low income earners or MSMEs fall into this new 1% presumptive tax band. Second, implying further that businesses which are not defined as MSMEs, whether or not they operate in the informal sector, are not eligible for the 1% presumptive tax regulation. And thirdly, businesses, enterprises, or companies which are defined as MSMEs but operate in other sectors, such as the formal sector, are not eligible. Now, the key highlights of the new 1% presumptive tax for MSMEs in the informal sector. One, the presumptive tax regulation imposes a 1% presumptive tax on turnover of eligible businesses in the informal sector where proper records are not available. The target of PTR is MSMEs operating in the informal sector. Businesses with annual turnover of 12 million naira or below are exempted from paying the presumptive tax of 1%. That is exempted from paying income tax. Businesses with annual turnover above 12 million naira may be taxed on the new 1% presumptive tax where proper records are not available. Please, I hope you are taking note. Where proper records are not available. PTR bans the use of roadblocks or such other informal mechanism for collecting or enforcing tax collection. PTR bans cash tax collection and mandates payment of taxes through approved electronic banking or digital channels. PTR was issued in pursuance of the new Nigerian Tax Act 2025. PTR seeks to unify, modernize, civilize, and simplify tax system for MSMEs operating in the informal sector as a pathway to their formalization. The fundamental meaning of the new 1% presumptive tax. The fundamental meaning of the new 1% presumptive tax is that the new 1% presumptive tax is a form of income tax specially created for taxation of the income of low-income earners and MSMEs which operate in the informal sector in pursuance of the income tax provision in the new Nigerian Tax Act 2025. Other matters, please, that you need to know. Kindly pay attention. First, the 1% presumptive tax is not a new or separate tax. It is part of the income tax type. It does not replace the substantive income tax system, which is profit-based. It comes into application where you do not have proper records. It was issued pursuant to implementation of the income tax system in the Tax Act. It applies only to income tax. Unlike the conventional income tax system, which is profit-based, it is turnover-based. The threshold of 12 million naira of annual turnover for nano and small businesses supersedes the threshold of the 100 million naira in Nigerian Tax Administration Act 2025 for small businesses. Essentially, it is only a special method which the Tax Act empowered the minister to adopt to collect income tax from a group of taxpayers. This group of taxpayers to which the 1% presumptive tax applies is MSMEs that operate in the informal sector. This group includes traders, artisans, transport operators, service providers, obviously self-employed individuals and small businesses for which the tax authority cannot easily and correctly determine their income. The new 1% presumptive tax is uniformly applicable nationwide. The new 1% presumptive tax is a direct product of the unification, consolidation, harmonization, and modernization objectives, initiatives, and collaboration between the national and subnational tax authorities in Nigeria, between the Nigerian Revenue Service, the 36 tax authorities, and the Federal Capital Territory, including the Joint Revenue Board. The new 1% presumptive tax does not replace other tax types or forms such as VAT, PAYE, stamp duty, PPT, that's petroleum profit tax, withholding tax, etc. They still apply where they should. The new 1% PT is a final income tax. The new 1% presumption tax is a final income tax. Once you pay it, you have paid your income tax and you don't have to pay any other form, any other income tax, and nobody should disturb you for any other income tax. The legal basis for presumptive tax for MSMEs in the informal sector in the new Nigerian Tax Act. In order to clearly understand the 1% presumptive tax for MSMEs in the informal sector, recently signed by the Minister of Finance, it is important to know and understand the legal basis as provided in the new Nigerian Tax Act. Section 15 of Nigerian Tax Administration Act 2025 states that notwithstanding the provisions of Section 14, a relevant tax authority may issue guidelines for the filing of a simplified income tax return by low-income earners or persons operating in the informal sector. Section 29 of Nigerian Tax Act 2025 states that notwithstanding any provision of Chapter 2 of this Act, where for all practical purposes, the income of a person chargeable to tax under this Act cannot be ascertained or records are not kept in such manner as to enable proper assessment of income, then such person shall be assessed on such terms and conditions as may be prescribed by the minister on the advice of the Joint Revenue Board in a regulation under a presumptive tax regime. That is how we came to the new 1% presumptive tax. Application of the legal basis for presumptive tax for MSMEs in the informal sector. You have seen what the Tax Act provides, that a relevant tax authority may issue guidelines for the filing of a simplified income tax return by low-income earners or persons operating in the informal sector. You all know the nature and characteristics of low-income earners that operate in the informal sector. They have little capital, little business, little income, few employees. They are unorganized, unstructured, non-formalized, undocumented, and unrecorded. So where do you begin? Consequently, it becomes very difficult to ascertain the correct incomes of such operators in order to properly assess and tax them using the conventional record way of taxing incomes. Thus, the inevitable need for some other method, and there comes the presumptive tax system, which states that where for all practical purposes, that is section 29 of NTA, I am quoting now, states that where for all practical purposes, the income of a person chargeable to tax under this act cannot be ascertained or records are not kept in such a manner as to enable proper assessment of income, then such person shall be assessed on such terms and conditions as may be prescribed by the minister on the advice of the Joint Revenue Board in a regulation under a presumptive tax regime. Like I said before, this is how we came to this new 1% presumptive tax. Key objectives and benefits of the new presumptive tax regime. So, what are the objectives that this 1% presumptive tax want to achieve, and what benefits do you have to get? First, the objective includes simplify and encourage voluntary tax compliance for the informal sector. Simplify tax computations for MSMEs by replacing complex profit-based assessment with simple turnover-based assessment. Unify federal and state tax rules. Provide and implement one unified tax system for MSMEs in the informal sector across Nigeria, all over Nigeria. Modernize and civilize tax collection practices in the informal sector instead of using the crude way, the violent way. Eliminate arbitrarily discretionary and hostile tax collection practices that have been there in the informal sector. Create a structured pathway from informal to formal sector for MSMEs. Expand the national tax base, rather increase tax rates. Reduce cost of collecting tax revenue for tax authorities. Open door and position MSMEs for stronger growth through better access to credit, insurance, and government support. So, what is the scope and application of the new presumptive tax? The new presumptive tax applies to the following persons. First group, micro, small, and medium enterprises, MSMEs, that operate in the informal sector. Next group, nano businesses that operate in the informal sector. Third group, these groups include traders, artisans, transport operators, and service providers, self-employed individuals, and small businesses for which their income cannot be easily and correctly ascertained. Please note that the new 1% presumptive tax does not replace the substantive tax law on income tax, even in the informal sector. It applies where there are no proper records. Consequently, any taxpayer can opt to be taxed by the usual profit-based assessment system, so long as such a person kept proper records. And the tax authority can watch this legally, properly, conveniently, and cost effectively ascertain and assess the person's income to tax. Exempted and taxable business thresholds for the new 1% presumptive tax. There are some businesses, even in the formal sector, that are exempt from paying tax, and some are not exempted. They will just pay only 1%. So, what are these businesses? Please pay attention. Exempted businesses. Businesses with annual turnover of 12 million naira or below are exempt from the new presumptive tax in order to protect the very small ones, nano and vulnerable businesses. The next group, eligible or taxable businesses, those who have to pay this 1%. Please listen to who they are. Eligible businesses, that is businesses with annual turnover above 12 million naira, may be assessed using a simplified turnover-based system. Such eligible businesses may be assessed at presumptive tax rate of approximately 1% of annual turnover, where proper records are unavailable. The key salient points that you need to know about the new 1% presumptive tax. First, the 1% presumptive tax is not a new or separate type of tax. It is part of the income tax family. It does not replace the substantive income tax system, which is profit-based. It comes into application where you do not have proper records. It was issued pursuant to the implementation of the income tax system in the Tax Act. It applies only to income tax. Unlike the conventional income tax system, which is profit-based, it is turnover-based. The threshold of 2 million naira of annual turnover for nano and small business supersedes the threshold of the 100 million naira in Nigerian Tax and Taxation Act 2025 for small businesses. Essentially, it is only a special method which the Tax Act empowered the minister to adopt to collect income tax from a group of taxpayers. And who are this group? This group of taxpayers to which the 1% presumptive tax applies is MSMEs that operate in the informal sector. This group includes traders, artisans, transport operators, and service providers. Obviously, self-employed individuals and small business for which the tax authority cannot easily and correctly determine their correct income. The new 1% presumptive tax is uniformly applicable nationwide across Nigeria, everywhere in Nigeria. The new 1% presumptive tax is a direct product of the unification, consolidation, harmonization, and modernization objectives, initiatives, effort, and collaboration between the national and sub-national tax authorities in Nigeria. The new 1% presumptive tax does not replace other tax types or forms such as VAT, PAYE, stamp duty, petroleum profit tax, withholding tax, etc. They still apply where they should. The new 1% presumptive tax is a final income tax. Once you pay it, you are paid. You are paid your income tax and you don't have to pay any other form of income tax. Some important definitions and clarifications with respect to the key components of presumptive tax. First, low income earners. Who are these low income earners to which the tax applies? It says that a low income earner is an individual or household who earns low income in comparison to others who earn high in the society. But the numeric threshold and definition vary from society to society, country to country, and region to Nigeria. So it is left for the Nigerian Tax Authority to give us the numeric threshold for low income earners, who is a low income earners by so amount of naira. Nano businesses. A nano business is the smallest or lowest category of enterprises operating below the micro enterprise level, typically managed by a single proprietor you call solopreneur, with few or no staff, little capital, little turnover, often unregistered, unstructured, and unorganized, with main focus on daily survival. Common nano businesses include petty trading, hawking, street vending, hairdressing, wheelbarrow carrier, and some others. Micro business. A micro business is the smaller or lower category of enterprises operating below the small enterprise level but above the nano business level, typically managed by a single proprietor, relatively fewer staff, little capital, little turnover, often unregistered, unstructured, and unorganized. Common micro businesses include freelancers, consultants, local service providers, and online retailers. Small business. A small business, please pay attention now. A small business is the small or low category of enterprises operating below the medium enterprise level but above the micro business level, typically managed by one or more proprietors with relatively few staff, little capital, little turnover, often unregistered, unstructured, and unorganized. Common small businesses include consultants, local service providers, and contractors. Medium businesses. A medium business is the highest category of enterprise in the informal sector, operating below the large companies level but above the small business level, typically managed by one or more proprietors with relatively higher number of staff, higher capital, higher turnover, often registered, structured, and organized. Common small businesses include manufacturers, industrialists, big transporters, service providers, and contractors. Informal sector. The informal sector is that part of the economy that is unstructured, unorganized, casual, opaque, usually unregistered and unregulated. It consists of thousands and millions of unregistered, unincorporated, and unregulated nano, micro, small, and medium-sized private enterprises producing, manufacturing, distributing, selling, and providing goods and services for income, often operating outside legal frameworks, taxes, or social protection. It includes street vendors, small-scale self-employed individuals, informal wage laborers who lack formal contracts, benefits, or job security. Distinction and relationship between the new 1% presumptive tax and other taxes. The new 1% presumptive tax is part of the income tax type family. Withholding tax is an advance payment of income tax, just like the presumptive tax is an income tax. Value added tax is a tax on value added by suppliers and is payable by every person who receives a supply and should be collected by every person who makes a supply. It does not have anything to do with the 1% presumption tax. Every vatable person is obligated to either pay or collect VAT as the case may be. Stamp duty is a duty payable on dutiable instruments to make them legally recognizable by the state and enforceable at the law court. It does not have anything to do with the 1% presumptive tax. Pay as you earn, you call payee, is a method of collecting income tax from employees. It is similar to the 1% presumptive tax, only that it applies to employees and does not have anything to do with the 1% presumptive tax. Employees or businesses subject to 1% presumptive tax will still pay their tax on their salaries, wages, and other incomes. That is their income tax. Some tax incentives for low-income earners and MSMEs. The new Nigerian Tax Act 2025 provided a lot of tax incentives for incorporated and unincorporated taxable persons, which include self-employed individuals and businesses. While the tax authority had identified about 51 tax incentives in the new Tax Act, Tax Corp had identified over 106 tax incentives and still counting. For the full list and explanation of the 106 tax incentives, please watch Tax Corp video on tax incentives on Tax Corp channel on YouTube or TikTok. Here, we will just give you a broad insight, but please know that the new 1% presumptive tax only arises where your business does not have proper records. Where it does, it will utilize all the following tax incentives and more. And they are exemption of nano and micro businesses from paying income tax, exemption of small businesses and companies from paying tax, various tax incentives on exempted incomes or profits, various tax incentives on exempted chargeable gains, various tax incentives on deductions allowed, various tax incentives on loss relief and capital allowance, tax incentives on final tax incomes, tax incentives on eligible deductions for individuals only, tax incentives on exempted vatable supplies, tax incentives on vatable supplies charged at 0%, input VAT, output VAT set-off relief, VAT refund or VAT credit relief, withholding tax refund or tax credit relief, various tax incentives on exempted stamp duty instruments. An example is that small companies with annual gross turnover of 50 million naira or below with total fixed assets of 250 million naira or below pay no income tax. They pay tax at 0%. They also pay no development levy. This is very nice, right? However, it will be nicer when the threshold of either 50 million naira or 100 million naira is resolved between the Nigeria Revenue Service and the National Assembly. In addition, to qualify, you have to incorporate your business. Similarly, small business with annual gross turnover of 100 million or below with total fixed assets of less than 250 million naira are exempt from charging, collecting, paying, and remitting VAT. Some tips on how to reduce income tax of low-income earners or MSMEs. Please pay attention here and take these tips for yourselves. First, know your tax law well. Don't depend only on your tax consultant or tax corp. Also have an idea of what the tax law says. Be proactive, plan your tax matters ahead, plan all year round, not just during tax time. Understand deductions allowed and plan to increase them legally. Understand deductions not allowed and plan to decrease them legally. Be creative and innovative, but please don't be fraudulent. Don't be evasive. Be planning and do better. Corporatize your business. Please corporatize your business. Monetize your personal efforts in the business. Don't mix business expenses with other expenses. Same with your banking activities. Don't mix your personal account with your business account. Describe your business expenses sufficiently and clearly as indicated below. Document all business transactions. You will require them later. Keep comprehensive, proper, and accurate records of your transactions. You will require them later. deduct all taxes and pay all taxes and duties on assets and expenses, recoup all taxes, be they withholding tax, VAT, and others. Claim all expenses timely and sufficiently. Take calculated risk, and when you have losses, please claim them fully. Spend more money on capital assets for your business and claim capital allowance fully. Select and resize your portfolio very well. Then invest heavily on tax exempt investments. Look out and choose investment with withholding tax, which withholding tax is a final tax because they are good. Withholding tax it varies from 2% to 15%, and some of them which end up as final tax could be 2%, it could be 5%, it could be 10%, it could be 15%, but company income tax rate is 30%. You can see it is higher than final withholding tax that are called final tax. So look out for such. Harness the tax incentive to reduce your tax. Go to our YouTube channel, Tax Corp, and harness the 106 tax incentives which we have identified. Significantly increase your contributions to the National Housing Fund. They reduce your tax liability and increase your capital assets. Significantly increase your contribution to the National Health Insurance Scheme, NHIS. They reduce your tax liability and enhance your health. Significantly increase your contribution to pension fund. They reduce your tax liability and guarantee a better life when you retire. You require that. You need that. Borrow money to build your residential house. For it reduces your tax liability as there is no interest limit. Most importantly, please watch this. Consult and stay with Task Corp for all your tax matters. Here are the list of the 22 interdependent compasses that relate to different tax subjects. All you need to do is to scroll through the list, and any particular one you want, just go to our YouTube channel or to TikTok. You will see our videos there, and you listen to anyone you want and solve your problem. And should you require anyone in particular, either that is not there or you want clarification, please drop your comments, your suggestions, your observations, and your desire in the comment section, or use any of our contact channels and contact us. So here is about Taskcorp. Taskcorp is a Nigerian tax consultancy firm which specializes in tax matters. Prince Chid, FCA, FCTI, MBA, is the principal consultant. Prince Chid is a licensed fellow of the Institute of Chartered Accountants of Nigeria, ICANN, and the Chartered Institute of Taxation of Nigeria, CITN. Taskcorp and Prince Chid have provided tax services to numerous individuals and corporate bodies in both the public and private sectors, locally and internationally. Since 1990, the beneficiaries include the Nigerian Revenue Service, formerly Federal Revenue Service, Revenue Mobilization, Allocation and Fiscal Commission, RAMFAC, State Internal Revenue Service, so many of them, Lagos, Abia, and so many, Federal Capital Territory Internal Revenue Service, and many private companies and individuals. So here we come to the end of this video. Thank you for listening, and should you have any clarification you desire, any observation, any contribution, please do so through our contact channels. Thank you so much.